What is up, you guys? Dylan Da Silva here with another day trading journey recap. This is going to cover 2 weeks, weeks 22 and 23. So both of these weeks were 4-day weeks. I took a day off on Friday, and we also had Labor Day on Monday, so that is why these are 2 4-day weekends, or 4-day weeks. So I want to start by giving this week a quick little brief title, which would be, to me, slow and steady, right? Slow and steady wins the race. You've all heard it before, the tortoise and the hare, the childhood book. It makes sense because in a lot of cases it's true. Week 22, which is the first week I had Friday off, I am down 6%, roughly $300, because we're back to the $5,000 capital. Don't know what I was thinking going with 25, but we're over that. Week 23, down 2.2%, which is about 110. So altogether, the past 2 weeks, I'm down $400. But it's still in the simulator account. I am continuing to use the Jared Wesley approach and how you're religiously sticking to your risk reward, 2 to 1, your stop losses, everything is to the T. You don't change or deviate from the plan. So what I've been doing in these past 4 weeks is of trading this way is I kept my plan the same. I haven't changed it yet, and I'm gathering the data on these trades, and I'm actually documenting my trades aside from TraderView in an Excel sheet, so I'll go over both of those. But right now, let's take the screen over to the computer and show you the data on the past 2 weeks. So here is the data on the past 2 weeks. These are both 4-day weeks, and yet again, my first day of the trading week, always green. I don't know what it is. If I only traded on Mondays, I would be a pretty good trader. But nonetheless, still losing a lot, and still developing my strategy, not respecting my stop losses. I'm taking a trade if I like it. As you can see, I take a lot of trades that are bad, and they're pretty even, so I'm sticking to that $50 risk every time, so that's why these are all similar levels. This was a $100 loss, this was a little over $100 loss, and this was a $150 loss. So I lost 1 trade here, 2 trades, 3 trades, 1, 1, 2. So looking at some other stuff, the details, roughly $400, average daily gain / losses. I'm losing $50 about every day I trade. My average winning trade is $80. My average losing trade is around $40. So now that's with slippage and being able to fill orders close to $50 with the share size I'm using. Because if you trade higher price stocks, you can't always risk exactly 50, so it's pretty close. That's why they're similar. But these are good numbers. I'm winning much more than I'm winning higher amounts than I am losing, but my accuracy is not there yet, not where it needs to be, or my game plan needs adjusting. So looking at the number of losing trades, I'm losing 77% of the time, and number of winning trades, I'm only up 11% of the time. So my largest loss, this doesn't mean I lost $100 on a single trade. It means I re-entered the trade and lost another 50. So compounding that to roughly $100. Performance by day of the week. Earlier in the week, I'm profitable, and then I lose composure the rest of the week. Or the market is more forgiving. There's a lot more people buying on Monday, Tuesday. They lose their money early in the week, and the rest of the week, it is the people like me that are just continuing to lose. Performance by hour of the day. My 9 o'clock trades seem to lose, and my trades that last until 10 o'clock seem to be winning. Interesting. So that is enough for just this. I don't think there's anything else worth really looking into. Now, I want to show you my Excel sheet because I'm documenting trades a little differently in this Excel sheet because it's going to tell me how to adjust my trading plan. So this guy, I think, is where the meat and potatoes of getting good at this is going to happen. This is where the good stuff is. This is where the juice is, right? Now I've been documenting my trades on a lower level instead of a high level, I'm good at this time of day, I'm good on these days, I'm good at stocks in this price range. That data isn't really as applicable. I mean, it matters, don't get me wrong, but I think your trading plan is what matters most. So this is going to affect my plan the most, looking at this data. But starting off, I have a bunch of the basics on the stocks I traded. So date, time, ticker, side, so buy or short, or long or short, price, quantity, pattern with rating. So I'm giving these patterns a rating out of 3, bad, medium, good, right? So, or low, medium, high. Simple as that. So when I see a setup, I'll rate it in my mind. Okay, that's a 1 out of 3, or that's a perfect setup. That's a textbook definition. That's a 3 out of 3. I haven't had one of those yet, but I've had two out of 3s, but most commonly 1 out of 3s. So I have a 3-bar play, and so I got a little different adjusting here, so let me remove medium. So I had some 3-bar plays, breakouts, continuations. I don't really do too many. I'm trying to narrow down to like a select 2 or 3 at most. Like there's going to be that one golden one eventually, but we're not there yet with my statistics. And believe me, 5 months is a lot of time to get good at day trading, but I don't think it's enough. At least for me, your average Joe, like it's not enough for the average person. I also have risk on this column, so like the dollar amount risk. I'm actually trading stocks that are pretty expensive. So I'll see stocks that are in like the 50s, 200s, 300s. Some are like maybe as low as 20s, but not often. You can see all the prices right here, where most of them are above $100, or no, above $50. I'd say most are above $50. But this stuff over here, some of this is kind of confusing and goes against like, well, if this one's always yes, this one's always going to be no. I know some of those are like that, but I'm still filling it out anyway for like a special case. I'm looking for that stuff right now, but I added this column recently because I think I'm onto something with the way I trade and the stocks or the patterns I choose. So with the patterns I choose, I know I'm going to look at eventually. This is the highest R, or R is terms of like risk. So every trade I take, I risk $50. So if I win 1 R in a trade, that means I won $50. Or whatever the case, whatever your amount you're risking, you consider that R. If I was risking 50, 1 R, a gain of 1 R is $50. If I was risking $5,000, 1 R is $5,000, right? So if I win 2 R on a $5,000 trade, I'm up 10,000. So that's how that works in this sense. In case you're not familiar with the R, I'm just now getting into the referring to your wins and losses in terms of R recently, after watching a lot of Jared Wesley's trading. So I have columns like this where it went 1 R without dipping below 0.5. 0.5 R, because that may change how I set my stop losses in the future. Reached 1 R without stopping, so this one kind of tells me, right off the bat I made a good entry. Reached 1 R and then stopped, so this is, did it continue into 2 R? Because recently, the past 2 weeks, my goal has been 2 R every time. If I reach 1 R, I set my stop at break even. That's what I've been doing. I haven't changed it yet, but I'm looking into changing this because if you see a lot of these stop out break evens, if I would have sold at 1 R, that would have been $50 profit on each one of these. So eventually, after I have like 4 weeks of data, 3 weeks of data, maybe after next week, I'll look into modifying this. But once I have a good amount of data on trades, or in the patterns I take, and like the averages of my trades, like the average R on my trades, I will modify that rule. So maybe I'm only trading 1-to-1 target, or maybe a 1.5 to 1, depending on how many R's I reached on average. So all of this stuff is going to tell me in the future, your trading plan needs to be adjusted to do this. I mean, there will be many different ways to adjust it, but this should give me the heads up I'm looking for on, you need to, instead of shoot for 2 R, shoot for 1 R, and then if it dips below, you double down in your position, you add halfway, whatever the case is. This data should be able to tell me that based on the average setup I'm trading. Like, yes, there are always going to be outliers, and stocks can be irrational longer than you can be rational, but for the most part, this should really improve my trading. And just looking at this stuff now and getting an idea for it, I can really see it helping. Because if I had, like I said, if I sold out at 1 R, I would be pretty close to break even the past 3 or 4 weeks. Because this data goes back to, this is 2 weeks worth of data. So my apologies, not 4 weeks. This is 2 weeks worth of data. If I would have stopped out at 1 R, I would have been close to break even instead of down a total of 8.2% on the past 2 weeks. So that's how significant this type of data documentation on your trades is. So aside from the stats in the past 2 weeks and the more recent, low-level data I'm collecting, I'm still sticking with that Jared Wesley technique, and I really do see this as, the light at the end of the tunnel. Like, if I stick to this, I keep track of my trades one by one, I start collecting this data, modifying my plan accordingly, I believe in about 2 or 3 months, I can be at a consistent break-even, possibly profitable spot. So if I'm approaching the 6-month mark, like next week is 6 months, and that'll be a long video going over everything a trader can experience in the first 6 months. At least your average trader. I don't think I'm a guru by any means. I've been losing almost every week, so not a guru here. You can still learn something from my mistakes, right? But 3 months from now, which will be about September, October, November, December, roughly Christmas time, I could be seeing, potential profits using a real account. I think by that time I will be in a real account. I can definitely say 6 months for me is not enough time. I have made too many changes. I have made too many mistakes, but the right kinds of mistakes, because you learn now as opposed to learning with real money, because you will not be able to replace real money as easily at all. So with 2 weeks of good data on my recent trades doing the Jared Wesley style approach, I think in the next 1 to 2 weeks, I will be adjusting this technique or my trading plan based on what my data tells me. Like if I start stopping out at 1R and see if I'm more profitable, I'll try that, whatever the case is. And I may have a really good accuracy, but I'm just overshooting my targets. Like my targets are way too high. And that all that stuff can be concluded from the data. So data is your friend. It's always your friend. Just learn how to read it and make sure it's the right metric for it, right? Is documenting, did this stock reach 1R before dipping 0.5R? Does that mean you can adjust your stop to 0.5R and reach 2R because now that's your 1R? Like stuff like that. If that didn't make sense, re-listen to it. I think I said it right. But all in all, this week isn't anything crazy. It's just another slow and steady week. Slow and steady wins the race. That's the title of this video. And, for the next couple weeks, we're going to stick with it and see where it goes. But other than that, no major changes. I think that's going to wrap up this video. Keep it kind of brief because, the real meat of these videos will come when there's a big change or I have a breakthrough. What this week is just slow and steady, no breakthrough here. Every day you keep learning, every week you keep learning, you're growing your knowledge, you're getting screen time, you're getting that experience. That's because that's how I learn. I need experience to do things. Maybe you're just like, you can read a textbook and you can know exactly what you're looking at. I need to read it like 4 or 5 times. It's just my mind isn't, I can't process that quick. So nonetheless, that's going to wrap it up for this video. I hope you guys like this. Please give me a thumbs up, comment, subscribe, all the good stuff. If you have any questions, I'll try my best to answer them. Go ahead and comment below. But I will see you next week with we're at the 6-month period. The 6-month end of the day trading journey / start of the new continued journey. Recap, because that's going to go over everything in the past 6 months. I don't know how long that video is going to be, but I'll try and touch on every little aspect of it because there is so much that happened and so much to be learned from 6 months of your average Joe trying to learn how to day trade. So I hope you guys have a good one. I will see you next time. Peace. I'm Dylon Da Silva. Again, thank you guys so much for watching. I really hope you liked it. Give this video a thumbs up and do not forget to subscribe to stay up to date on all new content every week. You guys have a good one.